Hey everyone, happy Friday. Welcome to Finance Friday. This is the show where we transform your relationship with your money by giving you the information you need to grow and protect your wealth. I'm Amy Novakovich. This is Ryan Wilson.
Hey everybody.
We will also be posting this to our podcast, The Nova Wealth Show. It's on iTunes and it's on thewooditchnetwork.com, where you can see the video version of it as well. Follow us on Twitter at Nova Wealth Management. I'm always bad with the social media. I don't know. Instagram and our YouTube channel as well. Hey guys, thanks for joining. So I always like to give a tip right away in the beginning to give value right away. So what's really cool about this tip is that a lot of people don't know about it. So if you've ever heard the term shorting stock, I know you've heard it, so that would be ridiculous if I ask you. But if you've ever heard of the term shorting stock, or if you've ever wondered, like, can I make money when stocks go down? There's a concept. If I think a stock is going to go down, what can I do? Because everybody's always talking about what crazy stocks to buy. Well, you can actually short a stock, which means you sell stock you don't own, but you profit when the price goes down. So that's basically shorting stock. I don't want to get into it too much, and it's not a recommendation. It's just kind of something fun.
It's a little fun fact.
A little fun fact.
Yeah,
right.
Start off your day.
So speaking of fun facts,
yeah,
we have some for you today on renting or owning.
Ooh, what should you do?
Right?
You go ahead and tell
what
you think, and then I'll disagree.
Right. And then okay. So with interest rates rising, this obviously changes the landscape of getting a mortgage, right? However, you still have an asset. Renting, you have an asset, but you also don't have the obligation of paying for all these things when hurricanes come up. So we've actually had a couple things in the last couple of years that has spiked this conversation quite a bit, because it's like, oh my gosh, I'm a homeowner, and I just had a conversation with a client this morning. I have to, I still have to deal with my roof. I have to replace my roof. That's the thing that comes along with being a homeowner. But then renting, you kind of throw all this money away. Well, I shouldn't say it like that. You're putting money towards a place that you live, but you're not building assets. So Here we are to debate, should you own or should you rent? And I always make the case that owning... I'm
going to share this out quick.
Oh, good idea. Yeah, let's share this out, guys. Because this is a fun conversation. And even if it's not for you, it makes sense for people that definitely. Yeah. And a lot of times, oops, I can hear myself talking. I don't like that at all. A lot of times, it just needs to be like talked out. You know how when you're trying to make a decision on something, you just have to like talk through it?
Yeah.
To really.
Usually you'll talk yourself in or out of it.
Right.
Yeah.
And so I feel like this is one of those things where you might be sitting there watching like, well, I haven't really thought about it, but.
And I don't think there's really any right answer, which I think is kind of what makes it cool, this conversation, is that there's really not a right answer. There's better answers for you, but situations are different.
Yes,
and
very true.
And so I think that that's what makes this kind of a fun. That's why I joke that whatever you say, I'm just going to disagree with, because you can play both sides of the coin and you're not necessarily going to be wrong necessarily. You could be, depending on your situation, but we don't know that from just talking to our followers here. We don't know everyone's situations. We'd love to know them and be able to help and maybe do that more.
We can give it individually. Yes, right.
But this is just kind of a broad statement where, we may say certain instances are better to buy, but we also understand and can say it could be a good recommendation to rent at a time. And so we'll talk about that. Let's talk about it.
So renting, when does it make sense to rent? I think common sense tells you, oh, well, if I'm temporary or if I don't know where I'm going, or if I'm like in college and I don't think I'm going to live around here, whatever, things like that, it makes sense to say, oh, I should rent. I always say to that, though, you're taking a risk. Like, let's say your rent is $2,000 a month, right? I always love to put numbers to things when you're trying to make a decision, putting numbers to it instead of just trying to go over pros and cons. When you put numbers to it, it really helps you make it make sense. So let's say I'm paying $2,000 a month in rent. I'm going to pay $24,000 in a year. So if I were to buy something, do I not have a $24,000 cushion? Like, a lot of people fear, like, oh, if I buy, what if the market price goes down? Well, you have a $24,000 cushion. I guess it depends on how expensive of the house.
I think it depends on what you're, I think what a lot of people don't realize is most people don't buy based on the price of a house, they buy it based on the monthly payment. And so it ends up coming down to, is this monthly payment plus if the break even on the monthly payment, if you can find a place that you could buy for that's like the same monthly payment,
mortgage,
that makes a lot of sense to buy. But you forget that you're also putting anywhere from 5 to 20% down, depending on where that is. So that's the biggest, that lump sum plus closing costs.
But that goes towards the asset, though.
Yeah, but you have to be able to plan for that. So that's another reason why you can rent, is that if you don't have lump sums of money that you're saving for, then that could be a potentially good time to rent. But you have to save. If you're just going to say, well, I'm renting to save up for a house or saving for a down payment on a house, but then you never put money away, then you're just going to be in this cycle of always renting and always saying I'm saving. But you have to, that's why you rent, and then use that difference of what you would maybe be able to put towards a house and really save it, rather than just, going into
that's discipline, though, right? Like if I'm going to pay my rent payment, you know how you can actually make your rent payment like automatic. You know, a lot of people will still write checks, but nowadays in the electronic world, you can make your rent automatic. Just like you can make your rent automatic, you can make your savings automatic. So like, let's say the difference the mortgage would have been $2,500, your rent is $2,000.
Right.
You can take that $500 a month right away, the same day you sign the lease, make an automatic payment to go into a savings account to start paying for a down payment on a house. Because Ryan's right, you do have to kind of plan and have that down payment. Now, there are some mortgage companies that we work with. So if you're shopping loans and you don't have a mortgage company, definitely reach out to us, novawealthmanagement.com, or on the Facebook page, and we can hook you up with some good lenders, because we don't do lending. But there's a lot of programs out there that can be more flexible and less money down, and, flexible interest rates and things like that. So we can help you out there. But yeah, you do have to plan for the down payment. But with renting, I don't know. I feel like that is where is that money going? Like and then on top of it, it's out of your control. Like at any given moment, your landlord can say, oh, you know what? I'm selling the property. And it's out of your control.
Correct. Yeah. I mean, you don't have as much control, but you don't have any liability. And so that's kind of, I think there are people that
not any liability. You should probably get renter's insurance.
Right. But but renter's insurance is very inexpensive. And so the liabilities, if things go wrong, some people just don't like to deal with that stuff. Another idea.
And anybody feel free to weigh in. Like if you're renting, why you rent, or maybe that's a little personal, but hey, Heather, if you're renting, why you rent, or if you're considering weighing out both the options. I think when you're trying to go towards financial freedom, that is everybody's ultimate goal, right? The definition of financial freedom, we talk about this all the time. How do we get financially free? We have enough assets in our life that pays for our lifestyle, that I don't have to work anymore. I'm free. I could choose to work. I could choose not to work. I have built enough assets. If you rent forever, your chances of getting there are less. I guess you still could get there by saving up investment accounts.
Right, which is another method that people talk about, is that instead of that down payment, instead of putting it towards a house, if you were to actually put it into the market.
But you have to be disciplined.
But you have to, right. Absolutely. Right. But that is a great point, what you're saying about wealth building, is that I was reading an article through CNBC, and they said that it's a huge problem that if it doesn't change, because in a lot of areas, it's 35% of counties in the U.S. right now, it is cheaper to rent than to buy. And so, but because of the fact that over the last 100 years or so, it's been a huge wealth building tool for families, that it's kind of an epidemic, because now it's like, well, where is this wealth building going to come from if people aren't going to use this having an asset of a house and then being able to sell it and have cash to then live and to keep growing.
Well, not to mention, you want the payment to stop someday, guys. Like, you have to think beyond like just 1 year or 2 years. Like, someday, if I get a 15-year mortgage, in 15 years, I don't have that payment.
Right.
Yes, you have taxes, and you might have, if you live around here, you might have homeowners dues, but that's in your control. And I feel like it is at least in your ability to then rent out the property or live in the property or sell the property. You have options. With renting, you don't really have options. Megan says renting is a gamble of if you get a good landlord. who will take care of the property to your liking or standards. Oh yeah, Megan lived in a property that had mold.
Yeah.
Yeah. Like,
That's not good.
And you know what? The same is true if you rent it out. The same is true that it's kind of a gamble if you get good tenants,
True.
I suppose.
Yeah.
But I mean, anything.
But you have more control.
You do have more control. I think the key to financial freedom that I hammer home all the time too is a little bit of everything is the key to success. Like you just focusing on one method all the time and doing the same things over and over and over, chances are life's going to hit you and you're going to be like, oh my gosh, what do I do? Whereas if you have a little bit of everything, that's why I say to build up assets, to build up properties, because then you have options. You have a little bit of real estate. You have a little bit of investments. You have a little bit in retirement accounts. You have a little bit in cash. Like everything will pan out because you have a little bit of life insurance or whatever. You have a little bit of areas that you can pull from. Hey guys, thanks for joining. We're talking about renting versus owning right now. We're just kind of debating it because a lot of people do get comfortable with renting. But ultimately, I guess the question is do you feel like you're throwing that money away?
Well, I think that if you ask a renter, they don't want to, like, I mean, I rent right now. And so I don't want to feel that way. But ultimately, yes. I mean, I wouldn't say throwing it away. I would just say you're spending money. You're just spending money. And
it's necessary,
your return
though.
is only a roof over your head for until the end of that contract. It's not yours. There's no ownership. It's just a place to live. It's not but we're saving up and so I don't plan on renting forever because I do think that having a home and using real estate as investments and things like that are good.
Well, sometimes it takes time to build credit too.
Yeah.
Sometimes it takes years. Like after you get out of college, if you don't have a lot of credit, you have to take time to build that credit to even get a mortgage.
Right.
So that's another problem. We'll talk to Credit Carl on that one. Hey, Carl, my friend, shout out to Credit Carl if you haven't seen him on Instagram. But he can help you with your credit, building your credit. But that's another key is getting the right mortgage because you don't want to get a mortgage let's talk about leverage for a minute. So you don't want to get a mortgage at like 8-9%, which sounds ridiculous, but actually, it was a normal at one time. To us now, it's crazy. But if you get to where you're paying more in interest than you can make, because leverage sometimes is borrowing other people's money and then using that money to make money. So you borrow at 4% to go out and make 7%. You make 3% on that loan. That's called leverage. So once you get more and more into real estate, it's classic leverage tool because you knew, promise to Credit Carl, tag him or something. I don't know how to do that, Megan, but yeah, tag him. But if you can start building up different real estate, and there's people out there like a Grant Cardone that like built his empire on just real estate, not even investing, which we don't really, say, oh, just do real estate, but it can be a start. It can be a good leverage tool.
Yeah. So I think talking about mortgage rates, I think is a good kind of segue into talking about with interest rates rising. Does it affect whether to buy or rent, or does it affect?
It sure does to me.
The market, I think, is even worth talking about because I think it may be misunderstood of the effect that it has and things like that. And so I would say, does it affect it? Yes. Should it change your mind on whether you buy or rent? No.
I agree with that statement.
And so I think the main reason is so to put numbers on it, every 0.5% of raised mortgage rate is about $28 a month per $100,000. So you're looking at, if you were to maybe buy a $300,000 house and you then get bumped up from a 3.5% to 4.5%, maybe you're looking at a $280,000 house instead. It's not, or it could potentially, maybe you can take on that extra $100 a month. You know what I mean?
Yeah.
It's not a major, but it could affect maybe the price of the house that you're looking for slightly, but it shouldn't dictate whether or not you actually buying or you're just going to keep renting. I don't think that.
You know what else kind of dictates whether you should buy or sell is if it's a buyer's market. And I actually had Eric Dungy on talking about that. If it's a buyer's market or if it's a seller's market, whether the ball is kind of in your court or not on negotiations. That definitely has a huge bearing and a weight on, oh, is it a good time to buy? Should we buy versus rent?
Well, in our area right now, we saw kind of a surplus of buyers. When the interest rates start to go up, I think people get a little bit like, oh, I need to get out there before it goes up. And so then it's a seller's market where the sellers, you're going to have to, or the buyers are going to have to ask, are going to bid maybe even above the asking price in order to get a house.
And we've seen that happen.
Oh yeah, it's happening.
You list the price and somebody comes in above your asking price, pays cash or whatever, and then you're done. Because
the inventory is super low, but people want to get into that house before the interest rates rise.
Right.
But we kind of are now into a point a little bit where it's starting to even out. So as interest rates are rising a little bit, I think people are a little bit slower to buy, and then therefore the inventory there's more of, and so you can kind of now is a time where you can negotiate a little bit. So these prices are starting to come down just a little bit, at least in our area. It could be different in different areas.
Yeah, and they're still high in general, but I mean
they're coming down.
Yeah.
It's a buyer's market now.
Right.
Which doesn't necessarily mean you're going to get a house that's way under market value. You're probably not. But what it means is that there's a little bit more conversation.
It also depends on where you're watching this, like around the country. It definitely depends on where you're buying or, the market that you're in. But at the same time, the interest rate, going back to the interest rates, is a huge factor because remember, your whole first year or even 2 years, depending on how you set up the mortgage, could just be interest. And so I always say a lot, I was like, actually it makes sense to rent because your first year is always interest anyways on your mortgage. But then you had said
that you're always going to have that anyway. Year.
So you're just putting off,
you're just delaying the inevitable.
Yeah.
If you want to buy, there's always going to be an excuse.
Yeah.
So there's always going to be something that you can say, oh, well, if I wait, maybe the interest rate.
It's always like saying they're like, oh, it's just not a good time to have kids. Yeah. There's never a good time. I'm a testament to that.
And so
for sure,
we can do a little bit of if you want to use your whiteboard, I have an idea.
Oh.
And then you can use your
I don't know where it is.
Your fancy calculator thing you use on your phone.
Okay.
Because I want just to see
this is a surprise to me.
That if you think you want to wait.
I don't have a marker. Do you have a marker in here?
I don't think I do. Dang it. I didn't plan this well. This was kind of spur of the moment.
But I have this pretty whiteboard that we can use for demonstrations.
Where did that white? Is it in here?
Hey, Jim, you have a marker? Oh, here it is. Found it.
All right.
Never mind.
So can you pull up your mortgage calculator?
Yeah.
That fancy finance calculator you have?
Got it. Oh, by the way, if you don't have this app, it's just called Easy Calculators. Super awesome app. It has all kinds of calculators. Like we've got currency converter, loan calculator, tip calculator, APR calculator, auto lease calculator. It's all kind of fun stuff. Okay, what do you want me to do?
So I just want to the idea that if you wanted to wait for interest rates.
Yes.
But then let's kind of play some scenarios. So say you had, in 2018. Okay. The average mortgage rate was 4.54. Okay. So say you were going to buy a $100,000 condo.
Okay.
In 2018.
Are we financing the entire $100,000?
No, we're going to put 20% down.
Okay, so we're financing $80,000.
$80,000 of it.
Yep.
Okay. So what's the monthly payment on that?
Hold on, 15-year loan or 30-year?
Let's just do 30.
30-year loan, because that's a typical
one.
Yeah. Your monthly payment is $407.
$407. Okay, so then you thought to yourself, I'm going to wait, but let's play the scenario that it did go down.
Do you want me to be writing this down?
Yeah. So put that at.
So 100,000 condo,
100,000. Right? Yep. At 4.54. It was $407 with a $20,000 payment, down payment.
4.54, 30-year, 407.25 per month. Okay. So let's say that you lucked out and that in 2019 it did go down, and let's say it went down to 4. Okay. 4%.
But
that
condo went up
to
$120,000.
Okay. So now we have to put 24.
So now it's down. So it's that same 20% is 24,000 now.
So now the finance 96,000.
96,000. So your payment
is
going to go down a little bit.
Nope, it went up. you're financing $96,000.
Oh, because we only went down 0.5%.
Yeah.
So it's still, so in this example, so I was expecting it to go down, even down a little bit. But
so you want me to put in 3.75?
Yeah, let's try that. But the gist is still there, that you're thinking that if the interest rate, if you put a lot of weight in interest rate, then you're waiting for it to go down. But the reality is that if the market goes up and you're having to pay more for that condo or that house, then you're paying more in that down payment. And then you're still going to have roughly that same amount. So waiting is just not the best idea. The idea that there's never going to be a good time.
Or the opposite could be true. You're waiting for prices to drop.
Right.
You wait for the price to drop, but yet interest rates go up.
Yeah.
The opposite could be true.
Well, and the great thing too is that if
so you wait and then everything is all out of whack.
Yeah.
So interest rates and price goes together. They have to go together.
Well, and the good thing too is that even if in the rising interest rates right now, if you were to lock in interest rate, say they go down again in a couple of years, which they probably won't, because we're still in historically low interest rate environment.
For sure.
So I don't get too caught up in the interest rate because it's still low. But say it does go down, you can always refinance. You can always get a lower interest rate. And so I just wouldn't worry so much. Like I said earlier, don't let the interest rate dictate whether or not you're going to buy or continue to rent. It may affect the price that you can afford at the time, and that's okay. But don't let that be a decision maker.
For sure.
In that process.
So I just did one where, let's say the price drops to $70,000 that we're financing, and the rate went up though to 5.75%. Because that's kind of what rates did in the last 2 years or so. Rates have went up like 125 basis points or 1.25%. Your payment is $408.50.
Yeah.
So, I mean, if you wait, and I think you guys can see this, my writing's not great, but if you waited because the price dropped, you're like, woohoo, the price dropped, yay. But the rate went up, you're actually at a higher payment in that instance. So it doesn't really make sense to wait.
Yeah.
And you got to weigh these things out. If you're not either trying to save money for a down payment, or B, you're just not sure where you should be and you're going to be in that home temporarily, I think absolutely money in the bank is also a factor. Money in the bank, what the interest pays in the bank account. If you have money just sitting in a savings account doing nothing, paying nothing, it is definitely better to use that towards a down payment on a home. Because think of it, every dollar that you're putting towards the home is less that you have on the mortgage. So let's say my rate is 5.75%. I just took that cash that was earning nothing and am making 5.75% on it.
Right.
Do you see what how my logic is working on that? So it definitely makes sense to use cash sitting in the bank as a down payment instead of renting. Yeah. All right, I think we can kind of wrap this up.
I think
you want to summarize real quick, kind of?
Well, I think just the gist that we kind of came to the conclusion of today is that there are instances where renting is makes sense,
and building credit.
Yeah, so I think building credit, if you're saving for a down payment, but you actually have to be disciplined in saving rather than just getting a better place to rent and then you're losing at the end of that, and you're not sure where you want to be. Those are kind of the three main reasons that we think, okay, renting can make sense for you right now, for a short-term time. But what shouldn't dictate it is interest rates. What should dictate it is mainly just what you can afford. Right. And so maybe you can't afford your dream home right now. That's okay. Start somewhere.
It's still property is an investment. It's an asset, and that's on your way to financial freedom. Yeah. So definitely compromising sometimes on your dream home is worth it when you're just trying to build assets. Yeah. But again, not a recommendation, but definitely something to think about.
Yeah.
Okay.
Well, thanks for watching today.
Yay. You guys have a great weekend, and we will see you next week. Oh, I won't be. I don't think I'll be here. You might be doing it solo next week.
Great.
Yay, the Ryan Show. All right, guys.
Have a great weekend, everyone.